You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. It's that time. It's time for Options Bootcamp, known around these parts as Education Wednesday. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-scintillating, ever-engaging, ever-educational Options Insider Radio Network. A vast array of content waiting for you on the old network. The Option Block twice a week. This show every Wednesday, of course, This Week in Futures Options on Thursday, Volatility Views every Friday, Crypto Rundown on Monday, other shows scattered throughout there like the Advisors Option. Of course, on the pro side, we have pro Q&As every week, as well as Options Oddities, which in and of itself, I don't get a chance to talk about it a lot. It's kind of like our secret gem, but that show in and of itself is worth the price of admission. We talk about a lot of great, unusual activity on that show. If you can't find something to at least intrigue you, make you say, and put on some trades that will more than cover the cost of what you're doing over there on the pro, then you're not doing it right. Theoptionsinsider.com/pro is the place to go to learn more. Of course, you get live access to this. Everything else we do, you can heckle Dan live. That's a great thing. The giveaways already, man, it's crazy. Already starting to come up on the April crate. This is crazy time here. Time is flying this year. Nuts. And then, of course, a whole bunch more, including nearly 200 episodes of great shows already on that exclusive feed. You guys can literally listen for 200 hours straight without stopping if you are so inclined. So get in there, dive in, set aside a week and a half or so to listen to the shows nonstop. No food, no bathroom breaks, no sleeping, and you can maybe catch up. It's good stuff. So theoptionsinsider.com/pro is the place to go to learn more. Speaking of learning, let's do some learning with Professore P, a.k.a. Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show, sir.
It is good to be back here, Mark. Been such a long time.
Yes, so long since we've talked with each other. Let's see if we can get back in the groove. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, listeners, the moment you have awaited is upon us. We've all been looking forward to it for weeks now, saying, man, I can't wait to see what he comes up with this week. Yes, it is time, listeners, for the much anticipated, much heralded MTM question of the week. What you got, sir?
All right. Well, I'll tell you what. I have got a question for you, Mark. Are you ready for it?
Hit me, sir.
All right. So I was asked recently whether it makes sense to leg into iron condors. Okay. And
you said no and immediately slapped him in the face and then ran out of the room, right?
it was a woman, so I slapped her in the face.
Oh, okay. Yeah. Equal opportunity. Yes.
And so, no. So, here's the way I look at it. Now, generally, I would say that I don't leg into iron condors. I just put them on, in one fell swoop, as they say. But the way that I typically like to construct them is the short option tends to coincide with or be on the other side of support or resistance. And sometimes if the support or resistance line is just too far away from the money and I can't sell a credit spread for enough, or, maybe the strike proximity is such that, it's not worth it to sell the call credit spread, but the put credit spread is good, maybe because we're towards the low part of the range of that channel. I will sometimes just, do one of the credit spreads first, the one that I can get a good price for, and wait to do the other one later. Now, caveat to that is there might not be a later. The stock might not head back. If I sold the put credit spread and the call credit spread is too cheap, the stock might never head up there, so that I can bite off a big enough piece on the call credit spread, or it might get up there, but too much time passes and theta, erodes whatever delta gave you on the spread. And, so moral to the story is you really, if you're going to leg into iron condors, you really have to like the leg that you're putting on as a standalone unit. If you're going to do that put credit spread first, you must realize that you might not get that call credit spread. So you better like that put credit spread on its own. And then it's just gravy, as they say, if you end up being able to put on the call credit spread later.
Better love it because you're going to be wearing it. So
yeah,
like what you put on first out there. We always used to say, Dan, on the trading floor, do the hard leg first. If you are going to want to leg something, you do the hard thing first because, maybe you think you can always buy this call vertical. It's always going to be lining up there, but the put one's going to be hard. You do that one first and then do the easy one later. Intriguing stuff. Glad to see you're not assaulting your students, Mr. P. That was a test and you passed. Instead, let's keep on rolling. Let's see what our audience has on the brain. Let's go out to our own question of the week this week, Dan. And we went back to basics this week. It's always fun to get a pulse, get a sense of what's going on out there with our listening audience, Dan. So we're asking them this week an old school question. Which option strategies are you using most frequently in your portfolio right now? Obviously, it's a Twitter poll, so we're limited to 4 broad categories. So we can't fit everything under the sun. So if you don't see what you're looking for, you can always reply or DM with your favorites out there. We broke them up into these 4 categories, Dan. We said short put or covered call, long call or long puts, a vertical or diagonal or time spread. So they're all lumped in together there. And then the final category is the butterfly or just spreads with wings. Mr. Dan, what are you rocking these days? What's your go-to trade? And more importantly, what do you think our audience is up to?
Well, I mean, for me, basically choice A, C, and D, mostly. I typically don't do a lot of single leg trades, but I do now and then. I'm always looking at cash secured puts and covered calls for my investment account, which is in a completely different brokerage. But then vertical spreads and time spreads and butterflies and, the rest of the wing spreads, those I trade a lot, as far as time spreads go, that is what I trade during earnings season. Typically, we have a system for that. And then we have our credit spread genius and time spread genius and wing spread genius. So those trades are always triggering. But here's what I think our audience said. I think that our audience said vertical, diagonal, time spread. Do we have results on it?
Yes, we do. I'm looking at them right now, Mr. Dan. And you are unfortunately not correct.
Oh, son of a gun.
I'm with you. I lean more. I find myself lately doing a lot of flies and wing spreads, so I probably would fall in that category right now. And that's bringing up the rear, only 11.9%. So no love for that. Your favorite, the verticals, diagonals, and time spreads, came in at number 3 at 22%. And then number 2, one that I don't really do a lot of, you don't do a lot of, but our audience is liking, long calls or long puts, 32.2%. And then the number 1, our folks are premium harvesting, Dan, short puts and covered calls, taking the top spot, but only by a hair, 33.9%. So they're winning by 1.7% right now. If you agree, you disagree, listeners, get over there at Options right now. If you're listening live, you can get into the vote. If you're listening on demand, this will be airing next week. So you missed your chance this week, but of course, at Options, we always have a question of the week going. It's in the title, Question of the Week. So head on over to our Twitter handle there. And if you can't find it, scroll down a little bit. We try to pin it or retweet it throughout the week so people can always find it. But usually some fun topic lighting it up out there. So right now, you folks are harvesting a little bit of the old risk premium. Right behind it, you're buying a lot of premium. So interesting dichotomy out there in the markets right now. No love for flies, though. Intriguing. All right, let's go out some of our other questions we got here. Mr. Dan, let's go to this one from Argento. Argento says, this would have been good for our last episode about brokers. He says, when you open an options chain, do you typically show all of the strikes or do you focus it around the at the money strike? I'm trying to figure out how I should look at these things. Well, Argento, I guess the answer really is it depends. If you're pulling up, let's say, I don't know, SPY or SPX, and you're just kind of looking to sell a near the money put, you don't really need to look at all of the strikes. It's going to bog down your system. It's probably going to confuse you with so many strikes to look at out there. Again, it depends what you're looking for. If you're one of our listeners right now, you voted short put or covered call, you're probably doing a lot of those strategies, or even the long put or long call, both of our 2 winners right now. Both of those strategies probably going to be close to at the money, probably going to be in some of the larger, more liquid names out there. So you probably don't need to go much beyond. Most brokers will default to 7, 8, 9, 10 strikes around at the money. That's probably going to do it for most of you. Sometimes when I come in, if I'm just looking to establish a trade, I'm looking for some ideas, maybe I want to analyze an underlying, then I will usually throw up the full options train because I want to see what's going on out there. I want to see, hey, maybe there's some crazy OI on a strike I didn't know about. Maybe as a result, that particular strike and the strikes around it are maybe a little bit bid or a little bit offered, and that could allow me to maybe leg into something exciting. So for me, I like to look at all the strikes, and it helps me determine what I'm going to do. But for you folks, if you want to really avoid confusion in the early onset and you kind of know what you want to do already, then I think keeping it around the at the money could certainly make your life a lot easier. Mr. Dan, this is kind of a personal preference question. Which way do you roll, sir?
So, I mean, I agree very much with you on, if you're looking at spiders or NDX or something, if you just show all strikes, oh my goodness, like it's crazy. And I do that sometimes because I trade some 1 standard deviation iron condors on them under certain circumstances. It's just a pain in the butt to look at all the strikes. So I like to look at as little information as I need. And, sometimes you need a lot of information, sometimes a lot. But, I look at the range of strikes that I'm considering a trade within. And so, like, if I'm looking at call credit spreads or a covered call or something, I might go and just set the strike range for, like, the low could be like the at the money strike and the high is like $10 higher, $20 higher, or whatever. So I will go in and just set the strike range to what I'm looking at so that I don't have all this other crap to sift through.
Don't want to sift crap at the end of the day. But yeah, it's very much a subjective thing, Argento. There really is no right or wrong answer. If you're newer and you want to limit the distractions, or as Dan puts it, you don't want to sift through the crap, then probably keep it limited to 7, 8, 9, 10 strikes around at the money. That should usually do you for a lot of the strategies you want to execute. So many questions here that would have been great for last week, Dan. We got Kate. Kate S. says, how important is a broker's mobile app when I'm choosing a platform? Should that be my first consideration above all else? We just talked about this on our last show here, Kate. So hopefully you listened to that and you enjoyed that. again, this is highly subjective. If you're, like Dan and I, and you're surrounded by a bunch of screens all day in your office or wherever you are, and you have a lot of access to the primary desktop functionality, then no, the mobile app is really not that useful for you. I only really use the mobile functionality on my brokers. Like, let's say the last week or two when I was on vacation, I pulled it up there a lot. But outside of those limited scenarios, I'm not really a huge mobile first trader. So for me, the functionality isn't that important. For you, if you have a day job where you're away from your screens all day, and I'm assuming for the lion's share of you, that is the case, you're not full-time traders, then the mobile functionality is going to be very important. So like I said on the last episode, determine what strategies you like to use ahead of time, and then check out your broker to see how easy it is to analyze and track and trade those strategies in their mobile app. If it's really hard, if you can't really pull up the chains very easily, can't execute trades, can't modify your trades after you put them in, which is a big thing. I discovered that on a broker recently. You couldn't modify anything on the mobile app. And I said, I'm getting the heck out of Dodge. Canceling an order on the go, a very important thing. If you can't do that, go elsewhere. And also just the risk analysis, what they're giving you there. Can you see your P&L and everything else? Can you maybe play with some of your P&L? So adjust the underlying. If you can get a lot of the functionality you're used to having on the big desktop side on the mobile app side, some brokers will offer the quote unquote power apps or the super user version of their apps as a way to give you some of that functionality. Some of those are better than others. Maybe we need to do a rundown of those as well, the super options oriented ones. But in general, that's something you can easily test on your own. And if you're mobile first, then that should be your first point of entry for your broker. And that should be one of your key determining factors. Mr. Dan, again, you and I are probably not the audience for this, but what do you have to say for Kate wants to know how important the mobile is?
Personal question, Kate. That is a very personal question. For me, I pretty much always have my computer with me. Either I'm sitting in front of it for like 10 hours a day in my office here, or if I'm traveling for business, I have it with me. If I'm traveling for personal, well, I have it with me. So I don't know. I mean, I don't make a lot of trades on my mobile platform. So for me, it's not super important. But then again, I've been in an airport before being like, oh, crap, man, I've got these covered calls expiring tomorrow that I got to roll. And, sometimes you need it. So I don't know. I guess it's important to have because of the times that I need it. But usually I'm trading on my laptop.
Yeah, when you reach for it and you need it and you realize the functionality you need isn't there, it's bad.
Yeah.
So that's what I usually discover. Man, my broker's mobile app is crap. When I want to get out of something or adjust something and I just can't do it easily or even at all on the mobile app, that's when things need to change. Mr. Dan, you said personal question. You ready for another one coming in from our live? We got a question here from Nichols. He wants to know all your religious tendency. No, I'm just kidding. He wants to know. He says, hey, Dan, I thought you were a live vol guy. Why did you switch to toss? He mentioned on our last episode, you're a toss guy now, Mr. Dan. How long you been a toss guy and why are you rocking the toss these days?
Well, because, when live vol, split and SIBO bought some of them and such, I don't know. I think this was one. I don't know if there's actually really a reason. I think, like I said on our last show, that it's good to explore other platforms. And around that time when I knew LiveVol was being sold, to the analytics part to the SIBO, I was like, well, I don't know. Maybe I'll take this opportunity just to evaluate another platform. And I evaluated Thinkorswim and found that I really liked it. So, yeah, it's kind of funny. I don't actually have a reason for not using LiveVol anymore, come to think of it. So, yeah, definitely not casting shade on LiveVol, but just, serendipitously found Thinkorswim and just kind of stuck with it.
As we said in the last episode, money is mobile these days. It's easy to switch, and sometimes you find greener pastures and you want to jump. I will say, even on that TD platform, within that platform, there are so many options platforms there that it's easy to pick the wrong one. I was using we have a whole bunch of accounts here, and one of them was tied into the legacy TD options platform. Have you tried that, Dan? It's no bueno.
No, I didn't even know.
Yeah, it's crap. If you just go through like their basic interface, it's pretty terrible. You got to really opt into the toss and use that stuff, because the legacy TD options functionality, it's what we were talking about last week with crappy chains, hard to find, doesn't show you a lot of data. It's all that fun stuff and a whole bunch more. So yeah, don't find yourself using that. The toss platform amongst all the platforms. Don't use the legacy Schwab either, if they still even offer that. I don't know. The toss platform, definitely the best of the bunch over there. That's a problem when you have 4 freaking options brokers under one banner. It gets very confusing. All right, let's go. Let's keep on rolling. Thinking about confusing. The exchange landscape is very confusing. We tackled this a couple of weeks ago on the show. This question comes in from BBC 82. They say, I found the episode about options exchanges interesting. Well, thank you. We try to be interesting here. BBC 82. He goes on to write, do you foresee a time in the future when we start to see the number of options exchanges reducing? Short answer, he says, in the future, and maybe someday, not anytime soon. So short answer, I'm going to say no. Obviously, there is gold in them thar hills. It's not expensive these days for these exchange groups, and that's who's doing it for whoever, NASDAQ or MIAX or CBOE, whichever exchange group you're talking about. It's not expensive for them to spin up a new exchange. The technology is relatively easy. They already have a bunch of matching engines. They can just reconfigure that technology to have a different fee structure, and boom, you got a new exchange at the end of the day. All you really need is the medallion. That's the expensive part. If you can come across a medallion, get approved for one, that's why you see those medallions never really go away. Once an exchange is acquired, they don't really shut down old exchanges. They just repurpose them and rename them, but they keep them running. There's value in them at the end of the day. Having an outlet where you could route certain types of paper. Maybe in your exchange group, you have one exchange that does one type of paper and one that does another, and one that can handle this type and the rebate and all this. You want to have something for everyone out there. And so clearly the cost is low to spin them up. The cost to maintain them is pretty low, and they're actually a viable profit center at the end of the day. So until we see that point start to change, until we hit that inflection point of diminishing returns where spinning up a new exchange is just a expense and it costs you money, until we hit that, I would have thought we would hit that already, but clearly we have not. There are new exchanges on the horizon, so clearly we're not there yet. What is the magic number? Is it 25? Is it 30? I don't know. Is it 50? God, I hope not. But whatever that number is, we are clearly not at it yet, BBC 82. I don't think we're going to get there anytime soon. These exchanges all see value in it, and they continue to spin them up. Mr. Dan, what do you have to say for BBC 82? Do you foresee a time in the future when we will start to see the number of options exchanges reducing?
Yeah, I mean, my answer is just simply no, I don't. I don't think they're going away anytime soon. All the reasons Mark said, and, I mean, I don't see a catalyst for them going away soon, until then. And I don't know what that catalyst could even be. I mean, what I think the only catalyst could be is, some sort of governmental thing where Gensler wants to get rid of, having so many exchanges so they can't, game the system and put in all these fancy order types and, flash boys it or something like that. That would be the only catalyst I could even imagine.
Yeah, that, or these are for-profit companies at the end of the day, so they start losing money on exchanges, then that would cause them to quickly turn them off.
Yeah.
But, and that actually feeds well into our next question here from Rich. Rich says, I have a question for OBC. Well, you sent it to the right place, so you passed the first test, Rich. He says, Mark and Dan, I love the show. Been listening for years. Well, thank you very much, Rich. Glad you're having a good time out there. He says, your episode, Why Are There So Many Freaking Options Exchanges? Yeah, that's what we called it. Kind of a fun title. Got me thinking. You're both former CBOE members from back in the day when the exchange was a member-owned utility. Now all of the major exchanges are for-profit public companies with shareholders and analysts. I guess my question is that a good thing? Should exchanges be for-profit companies at the end of the day, or should the SEC maybe mandate that they go back to being utilities for the public good? Well, this gets back to what Dan was just talking about maybe the regulators stepping into the exchange landscape. For now, they clearly have said the answer is no, they don't mind it. This was a big process that went on back in the late 90s, early 2000s, listeners. It was called demutualization, a very arcane word. You don't see it thrown around too often, but that was effectively this switch over from these member-owned entities, which is what exchanges used to be. I was a CBO member. Dan was a CBO member. And they switched to for-profit public companies with stock on the exchanges and everything else. And all of a sudden, you started having analysts and shareholders for the exchanges. And you go to the big industry conferences, and there's a bunch of analysts floating around now that never were there before. And they're suddenly experts on the exchange space, quote unquote. So yeah, it's been an interesting change. Is it for the best? I'm sure the exchanges will tell you it's a great thing. You know, it made them a lot of money at the end of the day, made a lot of their owners and employees who had stock money. So they were happy about that. Some of the early members who got to change in their sheets for shares, they did all right in that process. I'm sure they weren't too mad about it either. For the long-term good of the marketplace, I think that's where the questions start to arise. Because you're right, I got into this business and most people view the exchanges kind of as a utility. It was a place where people came to execute trades, to put up trades, to provide liquidity. It was a service, effectively, to society and to the marketplace as a whole. And these days, there are many other things going on at exchanges outside of that core liquidity function. They're out there. In fact, most of these exchanges, if you ask them these days, that's not even their primary business. Their primary business is selling you market data. That's where they make most of their money these days. So they're more IT things. They've acquired other businesses that are on the IT side. So they offer vendors and analytics and market data and all these other suites of offerings that are outside of the core exchange function. So yeah, the core business of what it means to be an exchange these days has very much changed, very much different. I guess the old school market maker in me would say no. At the end of the day, I think there is a good place for that type of utility that is really the only goal is to provide liquidity for the public good. Maybe the realist in me says maybe that's a bit of a thing that has kind of gone the way of the dodo for a reason. There are costs inherent in maintaining these things. If you talk to any of these exchanges too, they will also say, hey, we are under attack literally every second of the day by state-run actors who are trying to breach our systems, to hack our systems. So you name it, Iran, North Korea, Russia, all of the above, as well as all the other legion of hackers out there are attacking them nonstop 24/7. So they need vast resources to fight back against that. So maybe a utility couldn't function in this modern environment where everything is, the need for cybersecurity is so vast and oppressive and expensive. Maybe we couldn't have that anymore. Maybe they changed over for a reason. So the nostalgic kind of part of me would say, no, it's not a good thing. Maybe some of the more realistic part of me would say maybe it's part of the modern era. That said, I wouldn't mind seeing a venue pop up that is really just about that, about the core function of providing a place for liquidity to change hands, not have any of the other nonsense associated with it, the market data, the other things that are inherent with an exchange these days. Getting back to that core focus, not be a public entity that's traded on an exchange. I think there could be an opportunity for that. And people have, flirted with that. There's talk about that these days. So I'm not the only one saying that, but intriguing stuff nonetheless. Mr. Dan, what are your thoughts, sir?
Well, at the heart of this question, really, I kind of want to reframe the question a little bit here.
No, that's not allowed. You must do it literally as it is written.
The question really is, what sort of ownership structure is best for an exchange? Basically, I'm just kind of rephrasing a bit here, because, make no mistake, back in the day when they were membership owned, they were still private sector. they were just owned by the individual members in much the same way that like insurance companies back 100 years ago used to be. Insurance companies, like, like the word mutual is in the title of a lot of insurance companies, Mutual of Omaha or whatever. That's because they were literally owned by the policyholders, where the exchanges were literally owned by the people, the members who traded on the trading floor there and owned a membership. So that was basically like what the shares are now. Now it's a corporation. People who own the shares own it. So, they've always been private sector. They have always been, and I believe still are, SROs, self-regulatory organizations. So I guess what the question comes down to is it better to have, 100 or 200, how many memberships were there back in the day? 800 or something like that? To have a few hundred individuals own this entity, or is it better to have shareholders own this entity? And that's a tough question. I didn't really think about what Mark was saying about, needing the deep pockets for various things like cybersecurity and all that. I think in a lot of ways, I feel like corporations are not necessarily always the best structure for exchanges, because the demand for profit from the shareholders, and from the owners of the company is so much stronger than it was when it was a membership owned scenario. I think when it was membership owned, like they just wanted to bring in more volume to trade and, grow the exchange at a good clip. And now the exchanges, like, their biggest product is not even volume anymore. It's data. And they're just trying to grab profits from wherever they can because they're a corporation. That's what their job is. That's just what they're supposed to be doing. And I don't know. I feel like some of that shoots them in the foot a little bit.
Yeah, I think the biggest example is what you used to do, Dan. After you were done market making, you worked at the Options Institute for a while, right? You educated people as an employee of the exchange. And these days, the Options Institute still exists, but that's it. Every other exchange entity that is now part of these for-profit public entities, they all view education as just a wasteful expense. They're not going to spend any money on it. The analysts say, why are you spending money on education? That's a waste of money, so they don't do it. And as a result, the education function, which every exchange used to have, every exchange had educators on staff. It was seen as a core mission back in the utility days. And these days, it's just seen as a wasteful expense. So we have lost things in this transition to for-profit public entities. And I would like to see, maybe there is an opening there. Maybe it is that time again here, Mr. Rich, for someone to come in. And I know we've had some endeavors along these lines, not so great success, but it's an intriguing idea. I think obviously the fact that you're writing in shows that there is still interest in this, maybe going a little bit old school for the exchanges at the end of the day. All right, Mr. Dan, wow, action-packed. Couple of episodes here. You and I have just been talking a lot, but it's been fun.
Indeed, man. Yeah, we covered some good stuff.
All right, Mr. P, before we go, if folks want to check out what you got cooking, where should they go? What should they do?
Well, you can find me online at markettaker.com, and we've always got great things cooking, and we've got some really fantastic people in our community, and we'd love to invite you to be part of that. So make your way on over to markettaker.com and join free and become part of the Market Taker community.
Check them out over there at MTM. And if you're in our community here right now, stay tuned. We'll be back in a little bit with your pro Q&A session for this week. We got the options guy himself, Mr. Overby, coming in to answer all of your questions, take on all comers. So if you haven't gotten your questions in yet, get them in now via the members hotline or, of course, via the live chat. And then we'll be back at 3 p.m. Central with Mr. Overby there. So if you want to check it out for yourself, see what all the fuss is about, get in on today's content and a whole bunch more, check out all the 200 or so episodes that are already waiting for you on the exclusive side. Only one place to go, theoptionsinsider.com/pro. Otherwise, we'll see you back here next week, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.